Hey, welcome to The Explainer. Today, we're going to break down the key financial updates straight from Coca-Cola's CFO, John Murphy, during their Q3 2025 earnings call. We're cutting through all the noise to get right to the numbers and the strategy that matters.
Okay, so here's what we're going to cover from the CFO's briefing. First, we'll talk about their main message of confidence. Then, we'll do a deep dive into the actual third quarter results. After that, a little checkup on their financial health, and finally, we'll look at their official outlook for the future. All right, first up, the headline. Before getting into any of the nitty-gritty details, the CFO really set the stage. He made a very clear, very direct statement about where the company is headed for the rest of the year.
So, what's the big takeaway here? It's all about confidence. I mean, despite everything going on in the world, in the market, the leadership team is standing up and saying, yeah, we're going to hit our targets. That's a huge statement of stability, especially with how uncertain things are out there. Okay, so they're sounding confident, but do the numbers actually back that up? Let's break down their third quarter performance and see what the real story is. The first number you gotta know, 6%. This was their organic revenue growth for Q3. And what that means is it's the pure growth from their main business without things like currency swings or acquisitions getting in the way. It's a really clean look at how they're really doing.
But here's where it gets really interesting. Where did that 6% actually come from? Well, it wasn't just one thing. About 4 points of it came from them raising prices. And the other 2 points, that came from a favorable mix, which is just a fancy way of saying people were buying more of their pricier, more premium drinks.
And look at this, another 6%. But this time, we're talking about profit. This is the growth in their comparable earnings per share, or EPS. So not only is more money coming in the door, but their profits are growing just as fast, and that's exactly what you want to see. Now, this is what really shows you how strong the business is under the hood. I mean, growing earnings is great, but doing it while you're fighting against some major financial headwinds, like a 6% drag just from currency rates, plus paying more in interest and taxes, that shows some serious muscle, some real resilience in their operations. One good quarter is great, but what about the long game? A company's real long-term health shows up on its balance sheet. So the CFO gave us a look at Coca-Cola's overall financial stability and discipline. Okay, let's talk about cold hard cash. The company's updated their forecast, and now they're expecting to pull in at least $9.8 billion in free cash flow this year. That is a huge number. But why is that number such a big deal? Well, think of it like this. After a company pays all its bills and makes all the necessary investments to keep the lights on, free cash flow is the cash it has left over. It's pure financial firepower to grow the business, pay off debt, or give back to shareholders. It's a sign of a really healthy machine. And speaking of financial discipline, check out their debt level. It's at 1.8 times. Now, what's really key here is that this number is sitting comfortably below their own target range. So they're not just meeting their goals, they're beating them, which shows they're being super prudent with their finances. All right, let's wrap this up by looking ahead. What's the official forecast for the rest of this year? And what are the early whispers about 2026? Let's see what the CFO had to say. So here's that guidance we talked about right at the beginning, all laid out. They're sticking to their guns for the full year. They're still calling for that organic revenue growth between 5 and 6% and earnings growth around 8% before you factor in currency. It just signals real consistency. Okay, so that's this year. But what about next year? Now, it's way too early for any official guidance, but the CFO kind of gave us a sneak peek at what's on their radar as they start planning for 2026. So it looks like the game plan for next year is all about balance. The priorities are pretty clear. Get more people buying their products, get back to more normal pricing as inflation, fingers crossed, starts to chill out a bit, keep a tight grip on costs, and hey, even keep an eye out for currency trends, which might actually give them a little boost for a change. So here's the billion-dollar question, right? As the global economy keeps throwing curveballs and we all feel the squeeze, is this playbook, this strategy of being disciplined, productive, and balanced, going to be enough to keep the Coca-Cola train rolling? I guess that's what we'll all be watching.